Welcome to the Venture Capital Podcast. This is the second episode we have ever done with guests. As you know, Peter, the co-host, but we also have David Frazier. Raise your hand for those of you that are watching here on YouTube. And we have Kendall Frazier. And I think I've known them for 20 years now.
Yeah.
20 years is a long time. So anyways, about once a week, Peter and I want to do every Friday, record an episode where we're bringing outsiders in to kind of come and share insights from either the founder's perspective or the other side of the table, what it's like to be a venture capitalist. And so this episode is kind of like the first episode. So if we make any mistakes, be patient with us. But first, David, Kendall, do you want to talk about first, without making any solicitations, what is the Frazier Group? How is it different? I don't know if you want to talk about your history at all, where you started in kind of like in secondaries and now you've moved to primary investments. Hopefully I'm saying that right. David's giving me this weird look. David also has one of the best senses of humor that around.
I wish you hadn't said that. I was about to say we guarantee 30% year-over-year returns, rock steady, rock stable. So that's important. We've been a venture capitalist for 25 years, working with our dad, and now we raised 4 venture funds from LPs, and we put it into software.
What's the size of each fund?
15, 20, 30, and then essentially 90.
Okay. So
they're going up a little bit each time.
Okay.
So.
Nice. At what stage of fund 4 are you in? Has it been fully deployed, 50% deployed?
It's mostly deployed, so we're going to go raise again. So.
Well, congrats.
Thank you.
What kind of deals do you guys typically look at? This is probably the most common question when people are like, hey, who do I talk to? What is your ideal profile?
Oh, we love to get into companies at the seed or the pre-seed stage. We like software as a service. We like AI. We love companies that are B2B. And that's what we look for. And then we also do a lot of follow-on as companies grow. So a lot of our capital will go into our existing portfolio as it matures.
And I feel like Kizix is also one of your proud investments.
Yeah, we like to say software. And then when people say what kind of companies, we always just tell them about Kizix. Software's boring.
It's a software company.
It's boring.
They make software and they move numbers and do stuff for businesses, but Kizix makes cool shoes that you can step in. So
I think 3 of the 4 of us are wearing Kizix today, right?
Yep.
Yes, you are.
Yep.
I think if you're connected to Utah VC at all, you have to be wearing a Kizix.
Right.
You got your Cotopaxi jacket in your Kizix. That's how you know you're VC. Right.
Well, let's kind of have this episode focus on AI and your perspective in the changing landscape. And how do you think the startups or the companies in your portfolio should be utilizing AI?
Well, I think at a base level, everyone should be using it to increase their own. I kind of think of it in 2 different ways. So in the one camp, I think everyone should be using it individually for their own productivity, and their teams and the people they work with should be using it. But you're not going to get a valuation bump or credit for that because you're using AI in kind of a supporting way for your company. But it doesn't mean you shouldn't do it. So you absolutely need to be doing that.
I see.
I don't think AI is a differentiator for most small companies. We saw the coolest company ever. They were doing AI-driven insights for Salesforce. They'd look at all the data on Salesforce. Hey, when this happens, that tends to happen. If you want better results, do this, do this, do this, do this. And it was really cool, really analytical, really powerful. And then we stopped and we thought to ourselves, this is exactly what Salesforce will want to do, because that's Salesforce's whole job, is to create data on your Salesforce motion and then use it. And what I think is going to happen to this company, no offense if you're that company, is Salesforce is going to show up and eat your lunch because it's their data, it's their platform. If they say, hey, everyone, we've got this great, we just built this AI solution a year after this other small startup, but still we built it a year later. we've got an army of engineers, and we think everyone should use this. They're just going to eat the smaller company's lunch. So I don't think you should lead in saying, hey, I'm going to build this tiny little niche AI application. I don't think that's going to build you a competitive moat. It's the big ones that are going to swoop in and eat you up.
Peter, you're like nodding your head.
Oh yeah, I'm curious to hear what the Fraziers think from like where the opportunities are in AI. But a lot of the things I've been thinking about lately is that I think there will be big opportunities for AI infrastructure, and I think there will be big opportunities for companies that have unique data sets. And I think all the companies that are essentially AI wrappers there might be a couple winners in there. Who knows? It'll be hard to like pick out.
Some will get bought.
Some will get bought. I think of them like Canva. Like Canva is like an interesting like product market led growth UX, but there's nothing really special about Canva, right? From a technology perspective. So there could be some winners there, but I think they'll be really hard to pick. And I think the big thing is that the incumbents who already have the customers, already have the data, they're just going to be implementing LLMs from larger players and leveraging their own data set, their own customers. And frankly, like if you look at every single customer that's out there, or every single company, SaaS company that has access to these data sets, they all have an AI play, right? In process. They're all thinking about it because you have to. So I don't know. So that's where like I'm thinking about where the opportunities are, and where we're focusing is either unique data sets or infrastructure when it comes to like pure play AI.
Or just have a really cool business and say, hey, AI, we were already planning to do this.
Yep.
It was already going to be so awesome. And now this AI is helping us make customers that much happier. Like I like those kind of pitches, but if they come in saying, hey, we're different because we use a large language model, to me that kind of puts me off a little bit.
In that sense, do you look at AI as it's something that everyone has to implement to be competitive? As you look at like the economies of scale, everything is going to shift from an economic standpoint. And that if you don't do it, you just like let's say you're you sell widgets. Widgets are now 5% cheaper. If you can enable AI, you can stay competitive. If you aren't able to enable AI into your business, your ERP, then you're going to be at a huge disadvantage.
I think in the long run, that's 100% true, that it's kind of table stakes. Like this isn't what you do as a business, but if you're just less efficient, then you just won't make it. So, So I think you're 100% right there.
What kind of investments have you guys made in the AI space so far?
So the investments we've made are not large language model related AI, but a couple of them come to mind. One of them we did, and these were kind of done pre-AI hype, so we're kind of lucky on some of them. One of them uses visual AI to help identify cancer. That one's doing well. One of them.
Do you want to give a shout out?
Yeah, Pathology Watch. Whoop whoop. So they're doing well, and but again, it's not really related. Now they do incorporate some large language models just for helping write up notes and annotations when they identify cancer, but that's not their bread and butter. So I'm glad they're relying on that. They're integrating it in. That's not what makes them interesting. And then the other would be TwinThread, which is one of David's companies.
They are super cool. They do machine learning for industrial plants. So if you are Procter & Gamble and your plants, some days they're more energy efficient, and other days they're less energy efficient. They create a digital twin of the whole plant. They model every machine, every interaction, and then just machine learning. They just say, hey, you've got 10 million data points to figure this out. And it turns out, when things behave this way, they kind of affect those things that way, and builds a big, giant machine learning model. So they're really cool. And we also have an investment in Filevine. They do case management software for law firms. And I think law firms are a great place for AI. A couple of things we've seen that are really cool. One, they can generate demand letters, not just, hey, here's a regular kind of demand letter, but it'll ingest all the documents and all the interactions with a given party and say, hey, David Frazier has this lawsuit going on with so-and-so, and it pulls out of all the different documents, this happened, that happened, here's pain levels, here's medical records, everything. So pretty cool. Or another one we saw was they would do redlining for contracts. When you see two contracts and they're a little different, this one, kind of like DocuSign, says, hey, click here to find the next point where something's different from your contract, where they changed it. And then the AI can also say, hey, 80% of the time, this change, your boss finds that acceptable. You said net 30 payment terms, and they're saying net 45, and that's pretty cool. That's fine. And the AI can say, hey, but this other change they asked, we've never seen it before, and other companies never accept it, and it's pretty outrageous. So pretty cool software.
Is this what Filevine's doing?
Yep, they're doing a lot with AI.
They're doing a ton. They kind of just started selling it in June, and it's already like a really sizable portion of the new revenue.
Okay.
And that's so fast. So.
I mean, don't quote me and don't listen, Filevine, but literally, I suspect probably half of their value might be AI related. Like had AI not happened, they'd be worth half of what they'll be worth eventually.
Can you say what they're worth right now?
No. but they raised a couple years ago. They raised at $700 million. So they're big, and they're good at what they do. So it's not like a song and a prayer and a wish. It's like AI is very big to them.
And they kind of go back and reemphasize the point we made earlier, which is they have access to these unique data sets, and they have the customers. And so if you were going to start like an AI legal tech company today, you don't have those two things. Those are the things that matter, not the ability to tap into an LLM.
Yep. To your point, they don't have the data, so they can't train it to be quite as good at creating documents. And then B, they don't own the workflows of the customers. So if someone makes a different demand letter AI product, they have to say, hey, dear customer, I want you to export all the interactions you've ever had with a client to our system, move all the data out, which people don't love, and then we'll produce a demand letter, and then all we give back is just the demand letter. Whereas if it's done inside Filevine, where they already own the workflows and the data, they can reuse what they figured out from that demand letter 5 more times. They can say, oh, this is medical records. This is, whatever. So I think the advantage that the big companies have is pretty strong.
Yeah.
Do you think that AI could be an innovator dilemma scenario to and affect the very unit economics of the SaaS industry? So, for example, a lot of SaaS companies like Salesforce and HubSpot are built around the model of we are going to sell seats, but potentially AI could change it to, hey, we are now going to be charging for the output or the contribution, not just a generic seat. Do you see AI affecting like SaaS subscriptions in a major way?
I think in the long run, it's going to displace a lot of things, and people will have to get really creative. Like for me, not to go off topic, but related to this, I feel like SEO, if everyone in the world started using ChatGPT to search, like you don't search, you just ask ChatGPT, and it gets way smarter and it's way better, then eventually the whole SEO market is disrupted because you don't have to go check people's websites. People don't have to make great content because the AI just kind of circumvented the whole system. And I think they're all solvable, and they'll all get solved over time. Like Salesforce will find a way. If they're adding value, they'll find a way to extract it. And if SEO gets broken, then maybe the AI bot has to send money back to the successful websites, or they're not sending traffic now, they're sending money. Who knows? But I think it'll all figure it out though. But I think it's all going to break in the meantime. It'll all break and they'll all get fixed.
When you're looking to make an investment into an AI company, what are there things that you're looking for? I know like with running AI Utah, there's things that I look for to see if they're a wrapper or if they're really doing something foundational. For example, I look for statisticians, I look for data engineers, I look for people with longevity in the space. There's a lot of startups that are starting right now that I feel like there's not anyone on the team who has any statistical analysis training. And I feel like that's a core part of any of these LLMs that are currently being rolled out. So even if you're going to modify it or provide a wrapper, I question how well the teams understand that. And I feel like that's the current push in startups from my perspective, are missing that. Are you seeing that as well?
I mean, I think
What's that smile for?
I think that stuff is interesting and important, but I mean, if you're going out to build a true LLM, I mean, you need to raise a ton of money.
Define a ton.
I mean, look at like OpenAI, look at Anthropic, look at Cohere, look at, some of the big LLM businesses. They spend hundreds of millions of dollars, in some cases billions of dollars, on the processing to build these large language models. So I don't know. I get really skeptical that, a random startup is going to have the technical talent and much less so the capital available to build those types of complex models. So I don't know.
But what you were saying earlier, they could corner some data that would be valuable, or they could corner some customers.
Well, and in
workflow.
a lot of cases, though, they're going to use the LLMs that have been built and trained, by others. They'll ingest their own data into those, and be able to come up with unique insights.
I want to hear what you guys think about whether the large language models are even going to be differentiated or special. Like at some point, are they all just going to kind of seem kind of similar, and one day Anthropic is the best, and then 4 months later ChatGPT 5 comes out, and then are they going to be very special, or are they going to be a bunch of American Airlines versus Delta Airlines versus Southwest?
So I mean, I don't know, my viewpoint on it, having looked at several of the large LLM businesses, is that to a certain extent, they will converge. So they'll have like their unique differences. But honestly, I think over time, compute cost will come down. The LLMs will be more or less commoditized. What I think is more interesting is, will those companies be able to build the infrastructure? So will those companies be able to build the infrastructure that makes it easy for other companies to build on top of them? Much like there's nothing special about having a server farm, right? That's not what makes AWS special. What makes AWS special is all of the software that's layered on top of the servers. And so I think that is where like the bigger opportunity comes from. And so if you're looking like an OpenAI, I think OpenAI is like an interesting company, largely because like everybody uses ChatGPT, and because everybody uses it and everybody, they're able to engage with and integrate with so many different companies that they're building out this incredible tech stack that will, I think, allow them to have long-term longevity in the space. But, I don't know, like 5 years from now, if you're going to start like a brand new LLM business, I think it'll be more or less commoditized on that side. I don't know. That's my viewpoint. I'm curious what you guys think.
I like that answer.
I like that answer too. Actually, I was pitched by someone who wants to build an LLM to compete with OpenAI and Anthropic, and trying to think what the differentiator was going to be. I think it was going to be, he claimed that it wouldn't have all the safety controls.
and he was going to raise it from Saudi Arabia, right?
Yep, he was going to raise it from Saudi Arabia, and it wasn't going to have all the guardrails. I'm like, well,
but I mean, that's going to happen, right? But I don't know if that's the one that you want to invest in from like a business perspective, because like,
and how often do those guardrails really like hamper your business's ability to utilize the model anyway? Like, is that hurting Filevine because like, oh dang, that the LLM we're using isn't letting us redline the documents the way we want. So
Well, and frankly, guardrails are good, right? I mean, you think
Yeah.
about like Twitter/X
Yep.
got rid of a bunch of guardrails and got rid of a bunch of customers as part of it, right? So
Fascinating stuff. So, what about the back to this like company that pitched you? If you look at like what's happening in crypto, there's a competitor, and maybe Sam can maybe find it for us. He's our helper. Producer, should we call you the producer, Sam?
Are things happening in crypto?
Well,
Oh.
so I was listening to the All In podcast, and they were talking about how a lot of the markets, like the next FTX, they think is going to come out of the UAB, and because of the regulations, and they're making it easier, more predictable for people to work with. And do you see the center of AI if the U.S. is so focused, like if companies like Google are so focused on being politically correct, having all these guardrails out of the gate, a company could go to the UAB, have an infinite amount of cash that could come from there. And do you think that makes it tough for your portfolio companies, your investments, to be competitive?
I don't think so, only because of how much brain power, capital, and like GPU time you need to like make these huge AI models. I've read that like China is just struggling. Now they're not allowed to have the best, but I think it just has to be centered in the United States and probably even San Francisco for the next like year or two, because that's where all the smartest engineers live. It's where the capital is. You can get GPUs here. I think if you had a model that was trained without any of the guardrails that like the US might just restrict it and say, sorry, we're not going to let you, and maybe the people who provide it like NVIDIA and the data centers here would just cut them off. And I think even just the risk of that would be too great for them to attempt it. And then I'm not sure, like I said before, that like taking the guardrails off just unlocks all this power that is like good in a business case. I'm not sure that it like makes a lot of sense to take the guardrails away. Does that make you more profitable? I'm not sure it even does.
I mean, Anthropic makes the argument that they have more guardrails. And by having more guardrails, it makes it more compelling for businesses to
Yeah,
use.
then they can actually use it and they're not wringing their hands and they're not open to lawsuits.
Yeah,
Right,
I personally don't want guardrails on mine, but
But
enterprises are terrified by the idea of everything that could go wrong, and they
Right.
have to control it very carefully. And to the
Yep.
extent that there's, some protection in there, that makes sense for enterprises. And they're the ones that have all the money and spend all the money. And I wouldn't bet on a Saudi Arabian
Okay.
AI horse self.
the other thing too that kind of surprised me is that even though a lot of people talk about ChatGPT from a consumer perspective, the number of like actual consumers that are using it is relatively small compared to the number of businesses that are using it. I mean, and actually paying for it. So a lot of people use it, right? But they use the free version, but there's not a lot of like individual consumers that are paying out of pocket for it on a regular basis compared to like business paying for it.
Seems like coders get a lot of value from it,
Yeah.
but a lot of other people just use it as a modestly better search engine, and businesses are going to use it everywhere all the time
Yep.
in a really cool way. So
How-
I'm
just saw
100%
this-
on the hype train for like,
Yeah.
is it going to completely change everything in business? Yes. Is it going to change everything in the near term in your
Everything else?
personal
Yeah.
life? Not really.
Although, to counter that, I have this friend and he was like, I don't know what, it's our big anniversary coming up and I got to like do something nice. And he ended up like going to ChatGPT and being like, here's my situation. Here's my wife. Like, give me something like good. And it like gave him this big long love letter that he then like tweaked it just a little bit, gave it to his wife. His wife was like, "This is the nicest, like most romantic thing you have ever done for me in my life." Our
Oh,
marriage,
no.
right?
She's gonna put that into like someday there'll be something that checks if it was
there
produced.
are checkers. There are checkers.
She's gonna
There
put it
are.
in a checker one day, and that marriage is done.
No, I
No,
don't think
he
so.
can then claim that it was trained on his letter.
Yeah, yeah.
Be
yeah.
like-
That's true.
He'll be like, it was trained on mine. It was the pinnacle of.
Yep.
I mean, as long as he didn't lie, right? As long as he believed everything that was in the letter, then it's fine, right? But I guess my point is like he's getting this additional value, right, as a consumer, and something that's maybe a little less obvious. The other thing, though, I saw this chart recently that was really interesting, and they did this study, and they had like two groups. They had one group that had access to like a chat GPT and one group that didn't. And they looked at like productivity over time, and they were able to demonstrate like the quality of output of the work was like 1 to 2 standard deviations better on average if they were using one of these AI models like ChatGPT to assist them in their work than those that didn't. So it was interesting because like intuitively we think like, yeah, that makes sense, but to actually see it like in the data was really interesting.
I really like using it to get me started something.
Yeah.
I use it to get started, and then I try to go back to what I like to like my own tone.
Yep.
Like I don't like the output, but I like having something handed to me that's half done.
Yeah. It's like a nice framework to get you started. Although, it's like we did a podcast the other day and John threw in a like, hey, how do venture funds get evaluated into ChatGPT, and it gave out this outline, and I don't think maybe we included like 1 out of 7 sections.
I think the stats in that episode, there were a lot of internal like stats you were using outside of the MOIC and the IRR that weren't included in the outline.
Yeah. I guess my point is that it's not always 100%. It'll get better over time, but
choosing a venture capitalist is an art, and I'm offended by suggesting that we be defined by our MOIC or our TVPI.
Yeah, TVPI was not included.
That's hurtful.
In the output.
But so we covered those kinds of things because they are the things that like VCs get evaluated on, right? So, and it was just an intro course or intro.
I'm just
intro
kidding.
episode.
Actually, I feel like the hard returns are the only thing that matters. So
I was telling David, so we're LPs in quite a few funds, and a surprising number of them, when you go to like their investment meetings, don't even talk about like the IRR or the net IRR.
For the fund?
Yeah.
when
I'm
they're
shocked.
pitching their fund.
No, these are like the annual updates. So it's it's
the
not like
annual
a
meetings,
hard
yeah.
pitch, but yeah, when they're like saying, here's the performance, a lot of them just ignore it. Ooh, I don't know if it's just us that's raises like a big red flag for, or if all LPs feel that way. I have no idea.
Well, I don't know. I've been to a bunch of LP meetings, and my feel is that the funds that are doing well have no problem.
Yeah, then they share it. Yeah,
sharing
exactly.
their net IRRs, and the ones that are like, things aren't going so great, try to hide it one way or another. Yeah.
One of the things I've noticed as I've hung out with other VCs is how many VCs are investors in other funds. Why is that? Is that because it's the easiest way to get competitive intelligence? Are you just trying to build a network?
Well, we're part of that for sure. I mean, we've invested, I think we counted 13 venture funds that we're also a family office, as you might tell from Scott Frazier and Kendall Frazier and David Frazier. So we've done our share of investing in VC funds, and some of them are really great. I think it was just we didn't have the deal flow at the time, so we had to park our money in venture where we liked. But I think once you have enough deal flow, I don't view co-investing as like the pinnacle of your best deals. But the selection bias is really strong. And actually I take an exception to that because Peter, you've shared 2 of our best deals, Parallel and Project Solar. So thank you. But generally speaking, the deals that are really hot, super competitive, really compelling, a venture fund will put all the money in themselves. They'll say, this is the best thing we've ever seen. I love it more than anything. There's no room to share. And then there's a tier down where they're like, hey, we don't really want that much. No other venture funds really want it. And therefore we will syndicate.
Or they'll do stuff that's outside their stage, right? They're like, we're a Series A shop, and they're raising a Series D, and you can invest in that. But at that point, valuations are high, and they'll run SPVs and other things to make those happen. So, but not particularly helpful if you're a seed fund.
I don't view investing in other venture funds for their co-investment. I don't view that as like the end perfect situation, because the co-investing is good, but not arguably not as good as just sourcing your own deals.
I think so I'm an LP in a handful of funds, and for me it's partly because they're my friends, and I like them and I like their performance, and I want to be supportive, and I have friends that are LPs in my fund that are at other venture funds. And so there is, I wouldn't say it's like a quid pro quo per se, but there is a little bit of I'm an investor in your fund, you're an investor in my fund. We're friends. Let's go make fun stuff happen together. I think there's also a little bit of hey, this is an opportunity for me to diversify a little bit. Because for example, I'm an LP in a super, super, super early pre-seed fund. And that's not what we do as a fund. But I think it's an interesting place to be. So I'm, a small LP in their fund because, I like the diversification, and I like looking at the stuff that they're looking at, and so I think there's a little bit of that. I know there are a lot of funds, like Sequoia does this a bunch, I know, where they'll make investments in early pre-seed funds, and they're just hunting for deal flow from that perspective, or they're we want to do the Series A, and so we want insight into as many companies as possible. So they'll be an LP in a bunch of these pre-seed funds, and then those funds go out and write 100 checks, and so with 10 LP commits, they can have access to 1,000 companies, their metrics, and track them and so forth. So I think there's value there. Depending on what your strategy is. But yeah, I mean, that's my perspective on kind of why I've written LP checks.
How has AI changed your thesis as an investor? And then how would that correlate or change your thesis as a founder if you're a founder?
Oh, I would say it hasn't, but David could say better than I have. I think what the Fraziers really look for is something that can have a long-term competitive advantage. And sometimes a company like Kizik Shoes or Project Solar will come to us, and our first inclination is no, never in a million years would we invest in something like that. It's not software. But we dig deeper and we see okay, we really like the moats that they can build and the competitive advantages and different aspects of it, and we'll do them anyway. And so I think for AI, it's the same, where we just hold it to that same standard. And that's why we would invest if it can own the data or the users. And if it can't, we just wouldn't give it credit for AI. So we maybe would still invest just because they're using AI, and maybe they're overselling the AI part. Isn't we're not going to not fund it, but they don't get the AI credit because that part is going to be commoditized. So I would argue that it hasn't changed our fundamentally, but
I think that having AI, just the existence and the efficiencies of AI is a good thing for investors, because there's always kind of this push and pull between, hey, here are these legacy solutions that already work, that have already figured something out and meeting a need. And then here's these younger companies that are trying to disrupt, and they're trying to change the way things are done. There's always this push and pull. And I feel like AI is causing the gap between the two to be wider than ever. You look at some dinosaur, some Yardi or RealPage if you're in real estate, or
or anything that's on-prem software.
Any on-prem software. Right now, there are companies that are hey, they work, and they're, they check every feature set box that we have, And so they stick with them, even though you're like, why aren't you doing this new cool company? They do really cool things. But anyway, now the gap between the two is wider than ever. And so it's making, I think, all disruptive companies and young companies are going to be able to eat the dinosaur's lunch a little bit better. It's going to make them a little bit more stinky.
Yeah, I mean, basically, right, like if you're on-prem, you're going to have a real hard time implementing true AI tech into your tech stack and providing that value. Whereas a new up-and-comer that's more cloud-based right out of the gate can theoretically offer all those same features plus a whole bunch more that's even, it's even more difficult for those incumbents to be able to catch up with. So yeah, I think that's a great point. For me, like, it really hasn't changed our strategy a whole lot, other than what I talked about is like when we're looking at opportunities in AI, it's the infrastructure stuff, it's the unique data set stuff. And so if you're starting a new company and you want to be in the AI space, I would be thinking about like, well, where can I play in those two? Because if you're going to be just an AI wrapper, you're effectively building on someone else's platform, which you don't control. And that's just always a super tenuous place to be. And then I also think you're lacking the things that are like truly competitive and create, real barriers, which is customers and to a certain extent data as well, right? That your incumbents have. And if your incumbents have like a reasonable tech stack, they're going to be able to implement AI very effectively. So,
What areas of infrastructure are you looking at?
So these could be anything from like we've looked at like some of the large LLMs. We've looked at companies that are more on the actual like GPU cloud processing space. We've looked at companies that are providing like security in that tech stack. Different like optimization tools like picks and shovels really. So those are a few different types of examples of stuff that we are looking at or have looked at.
We saw one that I thought was really cool that was making machine learning more accessible, although maybe they're not that long-term protected, but they were basically saying, hey, to get to a good machine learning model, your data has to be in this kind of a state. You have to spend this much time to get there. And we've got these kind of pre-baked, not quite as efficient models, ways to structure your unstructured data to at least let you build kind of some shaky machine learning models. And, they're not perfect. And if you spend a long time refining your data, you'd get a better answer. But it's kind of like hey, get a quick and dirty answer and then spend the time to build something really robust. I thought that was pretty cool. But as I think about it, I wonder if, eventually that's not OpenAI's first mission is to make, models more accessible or value more accessible. So
If each of you were to start an infrastructure business, what would it be?
banana stands, there's always money in the banana stand.
I mean, honestly, I probably wouldn't because that's not where my expertise lies.
But if you had to, like, of trends you're seeing, like, let's get the secrets from the VCs without violating NDAs.
I mean, I'd probably take a look at like all of the different softwares that sit on and around like AWS and other cloud providers and think, all right, what are the things that are going to be needed that are similar to this for AI companies, right? Whether it's all the way down from like, hey, what's the next like digital ocean of AI to what are like the different cybersecurity tools that need to exist to what are the analytics packages, right? And I mean, there's going to be a point where like you have companies like Cloudability that help companies that are on AWS better manage their spend and understand that there's going to be companies like that that are going to be needed on the AI side as well. So I don't know. I'd be looking at some stuff in and around that.
I was with an AWS rep this morning who was talking about that idea. They'll just have these mysterious $50,000, $100,000 bills now that all these CEOs are like, do AI, and they're not going to know what the actual impact is.
Yep.
from that AI, that investment in AI infrastructure from like AWS.
Yep.
I think my advice regarding infrastructure would be to select a niche that's small enough to win that you can dominate. So if you just said, hey, make another, add on to AWS or something, I worry about that. We invested in a company called Opinion that was doing something not very special, reputation, like give 5-star reviews and leave reviews and surveys. But they did it in the multifamily real estate space where they said, hey, if you want really great reputation, you could just go to Podium and that'd be fine. But we at Opinion are going to make it exactly for what a property manager needs, and it's going to do exactly what a property manager wants when they want it. So you get a maintenance fix, then you get a review request, or you're going to leave in 3 months, then you get a survey saying, are you going to stay? You're going to leave? So they were doing something that wasn't going to win in the broader ocean, but they picked a small enough niche where they said, hey, we're just going to make exactly what people want here. And I felt like they won because of that. They're doing great. So I would just try and narrow down small enough where someone hasn't quite cared about it quite yet.
Okay. What about the data side? So the infrastructure side we've talked about. What about the data side? What part of that are spaces where AI makes it a compelling like company to run or an investment to?
Well, I think this is not entirely fair, but I think like Filevine's a good example of a company that has unique data, right? That they can leverage. So, I don't know necessarily where all the unique data sets might reside or where the potential there is, but entrepreneurs that have insight into like, hey, here's an area where I can tap into a very valuable data set based on the experience that I've, collected over my career, like, and I'm going to leverage that now with AI to come up with really interesting insights. Like that's, I think, an interesting opportunity. And frankly, there's so many of those potential data sets that are out there for people to either create or to leverage to do interesting things with.
Maybe target on-prem, some industry that's dominated by on-prem software. Filevine, because they're kind of up market for law firms. He told me that 80% of the companies of larger law firms still use on-prem case management software. So maybe look for an industry with like tired, sleepy, like there can be big competitors. They just need to be like the tired, sleepy on-prem ones rather than like hot, well-funded San Francisco startup giants. I also, Ben Peterson with Bamboo HR told me that when he was thinking about starting Bamboo HR, he looked at the industry and he's like, there are a lot of HRISs and there's some really big, sophisticated, scary ones. But he's like, but they're just like such bad companies. They're boring dinosaurs. And so they were able to come in as like a lean startup and displace them. And it was still a lot of work, but that's who they were competing with. When we evaluate companies, we draw this big difference, like what's the competitive landscape like? And if it's some big boring company, then yeah, that's okay that they are competing with them. But if it's like a well-funded San Francisco startup and it's really slick and good, then it's like, maybe I don't want to compete with them. They have a huge head start.
And my advice, if you're saying, hey, where should I go to like build a data advantage in my next business? I think you should just pick whatever's adjacent to where you've already been working and where your experience is. You've been at Divvy and you like factoring and credit cards, then do something related to that. Or if you were at Qualtrics, then do a Qualtrics related. Qualtrics just wouldn't solve this problem, and I will. So I in my mind, even more important than saying like this is a better place would be just, hey, what are you good at and what do you kind of know really well?
Yep. Yeah, 100% agree.
Where does AI go beyond LLMs?
Yes, I think it goes more broad. I think the LLMs are already really good at what they do, and the core is basically there. I don't think a year from now you're going to see ChatGPT-4, the core LLM, be like an order of magnitude better, but I think it's going to go wide. So, and it's already going multimodal, so you're getting images and audio files that it can process, and that's good. And I think people are hard at work giving it power to actually do stuff for you, and it's going to go just really broad and wide. So I think people are still scrambling to take advantage of the core that's already there, and I think we're going to see that. And I wonder if we're going to see more like stuff that's like LLMs but not for words. Maybe you'll see it related to images or other types of machine learning. I don't know.
I was talking with the founder of TwinThread, who does the machine learning, and maybe it's just because he's kind of old, but he was telling me, he was kind of a hater. He was like, a lot of these models that LLMs are built on, they're algorithms that are created in the 80s or earlier in the 60s. And that it's just the fact that there's enough processing power now that people are, these models are finding success, and they're being more successful than anyone expected. So I guess in my mind, I don't think anyone has a, here's large language models, and now here is the next evolutionary step. I don't think it exists yet, even in its infancy. I don't think anyone. But to Kendall's point, LLMs are going to be so successful, and they're going to be everywhere, and they're going to be 1,000 times more usable and ubiquitous. So I love that, and I don't want to understate that, but I don't think there is a next step, or when there is, it'll be something surprising that no one knows.
Now, TwinThread's out of Virginia, right?
They're in Bozeman, actually. But,
Bozeman?
But all their machine learning people are professors at, I think, University of Virginia or something.
Okay. How did you come across this deal?
Next Frontier Capital. So shout out to them. They operate in, they're in Montana, and they invest in like Colorado, Montana, Idaho, Utah. They're just really great, really smart. So they shared it with us. They've been in very early. They knew the founder of TwinThread for a lot of years. So they're great people.
Fun stuff.
Hey, what do you guys think? Do you think AI is going to replace jobs?
I think if you're saying they're more if they're adding efficiency into a business, at the moment you say that, you're also saying you don't need as many people doing the exact same jobs. So I think that seems clear. That seems like just like a tautology to me. Like, you say this, you're saying that as well.
Mm-hmm.
But I think the other half of the question is, are there so many jobs out there? Are there things that people can still do? Like, is there going to be a net fewer jobs in the world? I don't really think so. Like, people could say that about cars and horses and anything that's gone out of fashion, and there have been new jobs. So
entertainment, lots of entertainment jobs now that weren't there before.
Yeah. So I think there will be huge disruption. There will be jobs that one person does that 5 people did before. There's definitely that. But in terms of will new jobs exist?
Yeah, I mean, I think the thing that's kind of interesting is that the jobs that are least likely to get displaced are the more manual labor jobs that historically have been under threat from technology and machinery and robots and so forth. And the jobs that are probably the most threatened are a lot of white collar type jobs. I was talking to
serves them right too.
I was talking to somebody earlier today, and he was like, "Oh yeah, I was gonna, I went and worked at a Big 4 accounting firm, and even the Big 4, accounting firm was like, hey, with all this AI technology coming down the pipeline, it's gonna totally like change what accounting is." And he was like, crap, if you guys are saying that I'm not going to have a job, I need to transfer industries like ASAP, right? So, I think you'll see more of that, where like we just don't need as many accountants or lawyers or, a bunch of these jobs, which I actually view as a great thing, because I joke at University Growth Fund that I try to convince a lot of accountants and lawyers not to do accounting or lawyering things, and because it's just kind of a waste of their life and potential, I feel like, in a lot of cases, that they could take that same intellect and use it to to do things that are more creative. And I think that's where like there can be some really interesting new job opportunities, new careers, new businesses that exist because we're able to kind of unlock some of that human potential that currently gets locked up in law firms and accounting firms and other places like that.
I think that's right. And I think you're particularly at risk if you're like entry level white collar worker. Like paralegals are probably at more risk than a full fledged lawyer. And I think the lower level accountants are probably at more risk because I think the AI is going to say we just need fewer paralegals because
Right.
AI is doing that. And I don't know in 10 years where it'll be, but I think in the short term, it's kind of those entry level white collar workers who are really at risk.
Or anybody that doesn't have any sort of like real true differentiated expertise.
Yeah.
Right.
John, can I hold your phone so it seems like I'm reading from this?
Okay.
John, what do you think about universal basic income or AI or AI tax? Like, do we need to
Did you read my mind?
Oh, is that on there?
That's not on there, but it was going. We were.
Well, tell us your thoughts on righting the wrongs of AI disruption.
When I look at the economy right now, I see a massive amount of investment of our time and whatnot being spent on entertainment, and I look at that in relation to universal basic income in two aspects. One, have we just run out of opportunities to do productive things, and so will AI just push us that much more where we can entertain ourselves? Can we 8 hours a day and do 2 hours of work?
Nice.
Or is it the flip side of this entertainment is just a drug and it's keeping us from going to like the next stage of like civilization, like a Dyson sphere? Joke about the Dyson sphere,
But does that mean like spending more time outside and feeling the grass, or what's that? If entertainment is the drug, what is the
I don't know if it's the drug or it's the symptom. The symptom that we are becoming so advanced we don't have to work 12 hours a day like we used to, or it's a combination. I should flip this back on you now.
But what should people be doing with their time if they just like, hey, you get 1 hour of TV? What is the thing they do?
I think people should be focusing a lot more on education. I think education is more important than ever before. And it's going to take more and more discipline to do that when there's more and more distractions around. And when you see all these.
And when AI lets you skip getting educated.
I don't think it
like
works.
it
that way.
answers the
Does it
question.
feel-
It answers the questions for you. And you don't have to learn the math.
So
and you
like,
don't
what's
have
the
to,
point that AI can do? If I will need to know a history, I'll just ask at that moment, just in time history retrieval. I'll get it from the AI.
I look at AI right now from a coding perspective as it's really good at guessing like what's the next 1, 2, or 3 logical steps. But I feel like it has a much harder, it's a much harder process to say, hey, what's a degree or 2 order of magnitude better? And that's where I feel like there's going to be this huge breakaway. So you're going to look at like, I think a lot of junior white collar jobs, we won't perhaps need as many, and maybe we'll end up spending more time in school, getting educated. But I think becoming a critical thinker is more important than ever before. One of my favorite stickers I have on my computer at home was when it's talking about the last 2 years of the market. It says this is like the year of technical debt, and the idea was that when the interest rate for money was close to zero, people spent a lot of money just building code fast, building crappy code, and not really thinking things through because it was free. But I also I see that same sticker being applicable even more so today, where people, they don't have to really think things through or really analyze it. And like I look at ChatGPT and these other tools as doing really good jobs, but it will miss very important things. And there's been times where I've made decisions and I've like sent messages to other people based on analysis, and then I went back and I'm like, it made a completely wrong analysis. And so I think we shift. We can accomplish more, but critical thinking is more important. being self-disciplined is more important. Learning structure and rules is more important today than it was yesterday.
Oh, I know. I just thought of something I want AI to disrupt. The 4-year like college education. If you have AI, I don't know. It's like, are people going to want to sit in school and spend 4 years of their lives learning like rote facts and learning like skills that are like almost outdated by the time they get out of school? And like, would it be better for society if people just skip it, get into their start working on something that's valuable and then kind of iterate?
What are you gonna do?
Or you could go to
iterative
the 4-year
education.
school, but your 4 years are like, hey, you spent a year this time, and then you got a real job and you did this real thing, and then you furthered your education again. So I agree. I don't think it has to be a big lump,
Yeah.
like a big upfront, boom, here's just these years that you're educated and then you're uneducated ever again.
Yeah.
I will say, though, that one of the things I worry about with AI from an education perspective is, like, if you think about true innovation, usually people talk about it as the intersection of two separate disciplines. And the problem with, AI is that if you never learn, if you never become like an expert in a given space, because you're always just you have this crutch called AI that just serves up stuff, you never actually end up becoming an expert enough in enough disciplines to be able to identify new, innovative, creative solutions to problems. So that, I think, the flip side of saying, hey, AI is going to solve a lot of this tedious work that we do, is going to open up opportunities for us to do more higher level thinking, could also backfire in that regard too. And that, like, if it becomes too much of a crutch, that we don't learn, we don't gain experiences and so forth, like that could be a problem. The flip side is, I'm not a huge fan of 4-year education. I think for the most part, you don't use 90% of what you learn in school. And it's a tremendous burden financially for a lot of people. And I think there are much more effective ways to achieve same or similar or superior results, such as programs like University Growth Fund, frankly, right? Where it's like, come join our fund and let's look at some deals together. And we're going to teach you finance, and we're going to teach you analyzing markets, and we're going to teach you analyzing competitors and assessing management teams in real time, looking at real deals, versus like reading through a case study where you don't have enough context or depth to really get like
Well, that
meaningful
sounds
experience
awesome.
there.
Where was that 20 years ago when John and I were in school?
Well, the cool thing about a program like University Growth Fund is the answers aren't always like pure black and white either.
Right.
Like a textbook kind of says, oh, this is a better example because it's so obviously this way or that way. And
Yep.
And so that's a cool program.
But the real world's not like that, right? They're varying shades of gray, and sometimes it's hard to tell which shade is brighter, darker from the other. And sometimes there's a lot of just like variability in life and investments and all kinds of stuff where you're like, I never thought that company would succeed, and that ends up being wildly successful. And the company you thought like checked every single box ends up failing for some reason you didn't anticipate. So I do wonder, so back to your basic universal income question, if we didn't actually just go through an experiment of that over the last couple of years.
COVID money?
Yeah. So you think about like all the money that was spent on COVID, right? That went out to people to basically help them meet their needs over a certain time period, right? And one of the big results of that was inflation, obviously, but the other was this huge employment gap, and how hard it is for so many companies, particularly like restaurants, manual labor type jobs, to find people to work there. And like how frustrating, I don't know if you guys have felt this, but like you go to a restaurant and it's like there's nobody there to like serve you, right? And it kind of makes sense, because it's like, why would I do that when they're not paying me enough, right? And so my business partner was just telling me the other day that you can go and you can work at Panda Express and make like $22 an hour right? I mean, if you're working 40 hours a week, that translates into like what, $44,000 annually for serving up some wontons. I mean, it's
But it
kinda-
is hard
kinda
work.
crazy.
I admire people who work a hard 40-hour work week. So
Sure.
So David and I have a friend whose 16-year-old daughter was basically running the whole front end of this sushi restaurant.
Yep.
And he found out she was like serving alcohol and managing the whole thing. And he came in and he's like, nope, she's 16. He's like, put the kibosh on that. But it was just funny. He's like,
Yeah.
they're in such high demand that my 16-year-old daughter was just running the front end of the restaurant completely. Like, well, she's a smart girl. That's really impressive. But
Yeah.
also he's like, but it went too far.
Yeah.
Killed it.
Yeah. Well, no, I agree. I think it is a hard job, and it requires a lot of time and effort, but that wasn't a problem that existed before all of this.
I also kind of wonder, didn't a lot of that like stimmy money find its way to like just like some of the biggest tech companies like Apple and Amazon, and like, is that a wrong perception? Like, because people just, the money flowed, like they spent it, but it all just flowed into some of the
Well,
very
they
biggest
spent it
tech
somewhere,
companies.
right?
Yeah, they spent it. They'll spend it at the same place. I don't know. So it all kind of just flowed to these mega tech companies, and I don't know. I don't know how you address that, or maybe you don't with the universal basic.
Yeah, I don't know. I just think it's an interesting thing to think about.
universal basic income for me, but not for thee. That's my philosophy. That's what I want.
What are some of your biggest misses as investors?
So like investments we made that failed, or
Weren't in
investments that we
period.
should have made that
I mean,
we
like,
missed out on.
The whole reason I got into the venture space initially is I was a student at Brigham Young University. I recognized or perceived there was value of being, if you could find the next like Google early on. Omniture was the example I gave, but no one knows what Omniture is anymore, unless you're like part of the old school. But it's like, how do I find those opportunities? And I think of the opportunities I missed, like I saw Lucid Chart when it was just Ben Diltz. And I introduced him to his first business co-founder instead of like, taking that opportunity for myself. I was with the Utah Angels with Ben Peterson, and I saw him start Bamboo HR, and I'm like, this is crazy. And there's been like a handful of others that I've seen or have been connected to.
I actually feel like you shouldn't live your life looking at what could have been, and you just say, look, I'm going to try and make money the best way I can. And if this company makes sense to me, then invest in it. But I worry that if you look at it from the perspective of, boy, if I missed this one and it could have become $1 billion, that you're going to get stuck into the FOMO route, and then you're going to do even worse. So even though we've missed some big ones, we missed
Bamboo, but we were a little light on cash. Ben Peterson pitched, before David and I were here, pitched our dad for money right at the very start. And he's like, I was light on cash. I didn't do it, but he's like, but I should have made room to do it. But so we do have a fair share of misses, but yeah, David lectures us all the time at the Frazier Group about like not over learning from specific examples, because it can become like a logical fallacy almost to just overtrain yourself based on like, well, this was a huge hit and we missed it, and I invested in this and something unexpected happened and it did worse than it should have. Like, you need to learn from those, but a lot of investors over learn from just a couple of those data points, and you have to have the conviction to say no. We invest in things that are like defensible and have a moat and long-term competitive advantages. We're not going to fall into the FOMO trap, because if it violates our core convictions, then we just have to say no and have confidence that anyway.
There's a company in Utah that grew up to $1 billion valuation. They're now lower than that, although not officially. And I was convinced that the founder was a scammer, like a literal, actual fraudster. And I told as much to a VC. They're like, would you introduce me to the founder? And I said, I will, But also I want to tell you that I'm convinced they are like legitimately, actually real life fraudulent. And I connected them anyway. And then they invested and then they made a ton of money. I'm kind of hoping though that the company goes to zero so that I can be right. I really hope. If you think to yourself, who is the biggest, like the craziest founder, then you're probably thinking of the one I saw.
I don't know. I can think of like 10 that fit that.
No, but the number one. Number one. We're not talking Josh Jameses here. We're talking top dog.
I don't know.
No, I'm just kidding. But
Okay.
I guess the point is, you're wrong all the time, and I just think you got to be wrong as long as you're right sometimes too. Then good job.
Yeah, I was at this part, and I think I've mentioned this before on other podcasts, but I was at this meeting with a partner at Lightspeed, and he made the comment. He's like, venture is like the only career where you're wrong 70% of the time, and you are hailed as an absolute god, right? Like, because you were right the other 30, right? And so, I definitely respect what David was saying, is that like, don't get too caught up on your failures in this, because so many of those are like anecdotal data points, right? And when I think about like when I failed, it's because I didn't like, we have a relative, strike zone box, whatever. And like when I go outside of that, that is where I'm like, that was dumb.
Yep.
Right? Like
us too.
Like we did this like party round, and like we usually co-invest alongside another institutional investor. That's like a core tenet of ours. And like we went outside of that in this round, and it has not gone particularly well. And the thing that's frustrating is we're one of the larger investors, and so they hit us up a ton, and I'm like, I'm not a fund that is designed to like save your company, right? That's just not how we're designed. It's like, it's not a good or bad thing. It's just not how we're designed, right? So and then there are other deals where I'm like, we should have done that deal because that checked all the boxes for us, right? And we missed it because either we were too slow or because we misunderstood some key piece of the business. The one I talk a lot about is not that we actually looked at Uber, but at the time, but I remember when Uber was out raising and thinking to myself, like, really? Like, people are so excited about taxis? Like, this is a highly regulated, highly fragmented $11 billion market, like, which 11 billion is decent, but like, that's it. Like that, I was like, it's not that attractive of an opportunity. And what I missed there was it wasn't the taxi market. They grew the overall market, and it really was the transportation market, which is $1 trillion+ market, right? So like those are the times where I think about like, hey, what can I learn from that? Where it's like, hey, there's a shift in perception that I didn't have. And maybe like when I'm looking at businesses, can I maybe challenge my perceptions a little bit to be a little more expansive so that I don't miss out on huge opportunities like that? But honestly, it's hard, right? Like so many funds have missed out on so many amazing deals. And as a VC, like I can always give you, I don't care what the company is, serve up any company to me, and I can give you 10 reasons why it's a terrible investment. So that's not the hard part. The hard part is like knowing that, but then also being able to see the potential and like marrying the two in such a way that you get into at least some of the winners some of the time, and that you're not wrong more than 70% of the time. Oh, I'm kind of rambling there, but
no, I like it. I like that.
One of Peter's comments is to be a good VC, there's like 10 deals every year to be on Sequoia level to win. How does the Frazier Group look at like that type of a theory? Because like if you look at like, I mean, Peter's going after different type of logos than I think you guys go after. He goes after, he's in Spotify, Lyft, some of these other like larger consumer brands. And I think that's a very different persona than what you guys go after. Correct or incorrect?
We also do growth stage. So, there's also that. I'm not smart enough like the Frazier Group to go after pre-seed and seed.
We do I would say yes, we look for 10 great deals, but what we think differently is the 10 deals aren't 10 new deals. They are often companies we've already been invested in for 5 years, and we say we really need to get more money into this company, which means we need to call every employee who's left the company, ask them if they'll sell us their stock. Or it means we need to, at Filevine, we've been asking, hey, can we put more money in? Can we put more money in? And then one time, one of the executives needed to buy a house, wanted to move, and they're like, okay. And so just stuff like that, where I would say you don't have to necessarily pick 10 brand new great companies, but plumb your current opportunities as much as you can as well, and then you'll still get your 10.
I mean, are you guys looking for companies to IPO specifically?
Nope.
We just want to make money.
Yeah. So how is that different? Because I think a lot of the standard VC persona is, can this company go public? Can this be a $1 billion company? And when you talk with I've got a friend at A16Z, when I was fundraising a couple of years ago for a project, you talk with some companies, they're like, well, if you're not at $1 billion, we're not interested. Some VCs, and I talked to A16Z, and they're like, $1 billion's too small. We're not even interested. And I assume that you guys have a very different model.
That's the size of the check they're writing too.
Okay.
Because of the size
We
of their
look for
fund.
companies that can monopolize what they're doing. And so that means they're going to, over the long term, be able to get a higher margin on the business they do. So it's similar to that, but we don't have a number like $1 billion. It could be a smaller market, like an opinion, where it has a little smaller niche, but they can just dominate it, and we get in at a good valuation. And, hopefully that will be a really good IRR for us. I'm sure it will.
We were in GitHub, but they were acquired by
I didn't know you were in
Microsoft.
GitHub.
Yep.
That's cool.
Yeah, we were in GitHub, but they got acquired
by
someone who thought they were more valuable under their umbrella. And so we don't particularly care whether they're acquired or have an IPO. But like Kendall said, they need to have a monopoly potential or a competitive advantage. And those ones tend to grow big. So, if it's like, hey, we're going to buy 20 HVAC, 20 Jiffy Lubes and operate them really, really well, and our customers are really going to love us, then, we don't like that.
Because it can't get big. Yeah, I mean, so what I've said in the past, right, is that there are only a handful of deals in any given year that matter, that are going to generate the vast majority of returns.
Mm-hmm.
And that's just the power law of venture capital, because you've got, it's just super risky. Most companies are going to fail. And then you'll have a few that generate such massive returns that the company after them, is a fraction of as much return, right? And so if you're Sequoia, and you're Andreessen, you're one of these big firms, they have to be in those deals in order to win. But I think there are a lot of other models where you don't necessarily have to do that. And I think that's actually one area where the Frazier Group has done really interesting things. They're in some of the big successful companies in Utah for sure, but they're also really good at identifying some of these smaller niche businesses that don't need to be worth $10 billion and can still generate a very compelling return for their investors.
What we'd like to think is by logo, I don't know, half your companies might fail, or maybe 70%. But by dollar allocation, 90%, 95% of our money doesn't go into build. So
yeah,
we write the pre-seed and the seed. It's half of those or whatever aren't going to be big winners, and that's okay. And maybe we wouldn't normally go out and fund companies that are at a stage C or D or B for the initial check, but it's different if you have a board seat.
Mm-hmm.
And then they outgrow you and it turns into a board observer, but you're still watching. Then we do feel qualified to continue to pile money in. Plus, you're getting money in in between rounds at those later stages. So and you're valuing it based on the previous round in that case when you're buying a secondary purchase. So we kind of make up for it later.
Yeah.
But that's different most, venture funds that are at like the seed or the pre-seed deploy like 80% of their money into just brand new logos.
Into that
and they
first
save
check.
a tiny little reserve.
Yeah.
And I just don't know how they can make money doing that. And maybe they don't.
Yeah.
Maybe this is my last question, and I don't know what other questions you guys have. Does the Frazier Group still follow what I call the Frazier curve? Okay, we're gonna coin this. Okay, that's gonna be a new term in investing. And the example, probably one of the most iconic venture investing like presentations I saw was from your dad. Probably like one of the second to last Utah Angel meetings. And he talked about when you look at founders like Josh James, so he started Omniture, you see a founder who can grow and get a business to like 1 million, 2 million, 5 million, 10 million in revenue. And for whatever reason, there's a dip and they start losing money. And then they go through this kind of like tranche and then they start going back up again. And your dad talked about this being an example of them having to learn how to like retool, learning how to shift, how to pivot. And
Part of it's just the company finding product market fit, and it
Mhm.
takes a long time. So even if the
Mhm.
people are the same,
Mhm.
it just takes
So do you
a
guys
lot
still
of
follow
years.
that model where he's like, I don't care if I hate the idea, if I see this rise where they can get to significant traction and then they kind of stall and have to pivot and shift around and they lose profitability. Once they start coming up, he's like, I don't care. That's when I'm going in. That's when I'm investing. That's when I'm grabbing secondaries. Is that still true today?
I think that's something we want to do. If you're looking at a company and uh, I guess it's separating yourself from emotional baggage or all the baggage in the past of like, hey, they raised this money and this went wrong. And it's very tempting to avoid those situations because if you then put money in and get it wrong, you're kind of doubly exposed because you should have quote unquote known better. And so I think it's an admirable thing to just say, look, now is now and then was then. And, figure out what went wrong maybe and see if that's better. But kind of my rambling answer of yes, you shouldn't hold someone's history against them.
And I think that's what made it
More than
unique.
holding, like if they do wrong things or if they're no different, then
Yeah, if they haven't figured it out.
if they haven't changed, then don't throw good
There-
money after bad. But I think that's important to just
But that's probably where the Frazier
reassess.
like the Frazier legacy probably gained a lot of its mouth.
Well,
because
what I'm
valuations
saying-
were probably more compressed. No one would believe in the founder at that point. But it's like here's a team who could demonstrated they could execute. They recognized they learned to pivot, and then they start seeing an uptake again.
Yeah, but part of the reason those are good is because other investors act irrationally. And so if you're buying up their shares, they're selling at rock bottom price when they shouldn't. But I would say in a perfect world, no, because ideally you invest in it and it's just up and up and up. Those are just real rare. We have some of those and we love those. Those are like the best, but it's like most of our investments don't follow that track.
Okay.
And so like Filevine did, it was always good from day one. And that's great.
Mhm.
But there's not a lot of companies like
Yeah, like
that.
he obviously he didn't exclude others, but that was if you saw that trend, it was almost like
Yep.
green flag.
But I would say it's more like David's saying it's not being, we don't look for that and say, oh, well, that's a big winner because it's some kind
'Cause
of
it had a
roller
down
coaster.
round.
Because it had a down round isn't like necessarily a plus. We just don't hold it against them. We come in with fresh eyes and we have done well. The latest example there is probably Consensus, where we put in like 200 or 300K in 2014. They had kind of some ups and downs like that. And then in 2020 to now, we've put in another like 5 or 6 million. And we got it at prices that were pretty darn close to that 2014 price because just all the other investors were tired of it. And they're like, yeah, we've heard that story before. It's been on the roller coaster. But it was more based on looking forward and seeing the traction and having that board seat for so long than it was the actual roller coaster. It was just looking forward and not back. And then capitalizing on other investors who just want to get out of the dump.
Yeah. Well, we were co-investors with you guys on that one.
You were.
And
We
consensus?
we approached you to buy your shares
And I
probably
was like,
3 or
"Heck
4
no."
times, and you're like, heck no.
Jaren's
So-
a rock star. What are you talking about?
Yeah. So
He's gonna figure it out. Did figure it out. so.
we tried. We tried. I think that's when
Wait,
you referred
Jaron was at consensus?
Garen.
Oh,
Yeah.
Garen. Got it.
Yep.
He still is. He's still the CEO. And
Yep.
Yep.
Super impressive.
They're a great company. You guys stuck through it.
But I mean, to your point, right? Like, they pivoted their business model. They didn't have true product market fit, at least when we invested.
no, and they
And
turned
then
to the
they
enterprise from SMB to enterprise. So yeah.
And then they
pivoted.
figured it out. They got product market fit. Their metrics are incredible.
Yep.
And at that point, though, like to your point, a lot of people are like, I've been in this for a long time. This deal's got hair on it because, like, the valuation's all over the place. They're always, running low on funds. They just want out.
You
A
didn't
lot of
sell,
people
but-
wrote it
but
off.
A lot of people sold.
But a lot of people sold. Yeah.
But you'll get into trouble if you're just bargain hunting. I don't believe in like looking for the bargains.
I've never seen your data or the Frazier. Let's call it the Frazier
I'm just
Dynasty instead of the
saying
Frazier
you have
Group
to
as a
first
bargain
say
hunter.
this has to legitimately be a company we want more money into, and then you're like, okay, what are the dynamics of the cap table, the board, the other investors, and you kind of
It's the Warren Buffett put money into a great company at a good price, not a.
yeah.
not
And so
vice
it's different
versa.
for every company, but first and foremost, it has to legitimately be a good company,
Yeah.
and then you get your wheels turning on how you can get more of it.
Oh, for sure. So, anyways, let's call it the Frazier Dynasty instead of the Frazier Group. Deal? Can we get
The
that?
David Dynasty? Can we do that?
Frazier Brothers.
I dig it.
We got to cut Scott out of this.
Yeah.
That'd make me sad. I love Scott. Did you like my photo I took of him a week ago?
Oh, it was fantastic.
I
We
should
need to
get
put
that printed on
our
a shirt.
website.
Thanks for having us. This was really fun for us. I hope people enjoy it too. But thanks a lot, John and Peter.
Yeah. Thanks for being
just
on the pod.
Love hanging out with you guys.
Likewise.
All right. And so this was the first time we've been kind of like messing with this type of flow. Leave comments below on YouTube, on Instagram, on Twitter. Or I
Tell us
guess
what you
X.
think. Do you want more of this? You want less of this? I
You-
mean, how could you not want more
Less of
Fraziers?
this?
But-
Smash that like and subscribe.
That's right. Smash it.
All right. Thanks, guys. See ya.